It's finally happened. Interest rates have started to rise in the UK, having already started in the United States. For the third time in a row now in the UK, interest rates have crept up by what's called 25 basis points, which is 0.25 percentage points. So we've had 3 successive increases in interest rates for the first time in a very, very long time. So what's the first thing you can do about it? Well, you can hit the like and subscribe button because it's totally free and it's going to help you lots. I promise you, in all seriousness, it's much appreciated. Okay, let's get going. So in today's video, we're going to talk about how rate hikes impact you and me and everyone, and what you can do about it, and what it's going to do to the crypto world, which everyone is still talking about. So why is it happening? Well, in short, the world economies are overheating. Prices are going through the roof. Inflation is over 5% in many countries, really close to 10%. And when inflation goes over 5%, it's pretty much guaranteed there's going to be a recession. That's happened every single time in the last 70 years. And this was happening even before the Ukraine-Russia conflict, which has pushed oil prices and natural gas prices to even higher levels. In the UK, you've got utility prices that are not rising by 5% or 10%, more like 50% is what they're going to rise by on the 1st of April, and possibly again by the same amount in October, November in the United Kingdom. So some crazy stuff happening. That means people's utility bills are going to double inside a year. So if your monthly bill was £150 a month, it's going to go £300 a month, which is a big deal for most people. So governments need to take action to slow things down before they get really out of control. But let's take a step back here. What's been happening in the last 2 years is really weird, whichever way you look at it. There's been a world health crisis which has sent many businesses into bankruptcy, and what the governments have been doing is just printing money. As you can see in this interview with 60 Minutes with the Fed chairman, look what he said.
Fair to say you simply flooded the system with money?
Yes, we did. That's another way to think about it.
Where does it come from? Do you just print it?
We print it digitally, and we do that by buying treasury bills or bonds or other government guaranteed securities, and that actually increases the money supply. We also print actual currency, and we distribute that through the Federal Reserve Bank.
As you can see, they pretty much flooded the market with money, and that's printed money. So what does this actually mean for crypto? Well, let's start with Bitcoin, which is the big daddy of all cryptos. As we look back at March 2020, there was a massive sell-off, with over 50% sell-off in crypto, which in the world of crypto is not unusual. In the normal stock markets, a 50% sell-off is completely unheard of. On the bounce back, so post-pandemic, there was a huge rally with crypto rising massively. And that's what you get with crypto, massive fluctuations. So as I've always said, it's a highly speculative investment and should always be treated as such. When things get dicey in the world economy, people are likely to go towards what are called safe haven investments. These are gold, silver, precious metals, or utility stocks, or low risk stocks like Amazon or Google or Tesla, which is slightly higher risk but still very stable, big company. And people will tend to move money away from things like crypto, which are much higher risk, higher reward. But then again, what do I know? It could do the complete opposite. As always, I am not your financial advisor. This information should be taken for edutainment only. Rising interest rates mean for savers. You hear in many places that, oh, that means your rate of return on your savings goes up. Well, yes and no. I mean, in the past, I don't know, however many years when interest rates have been at historic lows, if you've left your money in your bank account, you've probably got between 0 and 0.5% return on your money. If the interest rates go up to, let's say, 1% or even 2% or whatever, and the bank gives you a rate of return of 2%, well, inflation's at 5 or 6% or 7%. You're not really getting anything for your money because the cost of goods is rising so much. I'm not convinced whether there's that much of an incentive for people to keep their money saved or not. I've got a favor to ask you. Smash that like button really hard, and if you're not already subscribed, make sure you subscribe and hit the notification button. Now, what's more interesting and more relevant perhaps is that as interest rates go up, house repayments, loan repayments are going to go up, and that's the whole point of raising rates, so that people now, where they're borrowing lots and lots of cheap money, won't be able to do so that easily. So where people are going to have to pay more for their loan repayments, that means they're less likely to take out housing loans and personal loans. So is there going to be a housing crash? This is a really interesting question. 2 years ago, at the beginning of the pandemic, when everything was imploding, people thought, especially in the UK, the prices would just really plummet. But they didn't. They kept on going up. Now, If we look back at the last big housing crash in the UK anyway, it was the credit crunch of 2007 and 2008. What actually happened then was that the banks stopped lending, and even though interest rates were near zero, you couldn't get a loan for less than about 4 or 5%. Now you have to remember that if the rates go up, that means the rentals will also go up for people renting who don't own property. It's always a consideration for the banking experts when they're making these decisions. So what should you be doing right now? As I said before, I'm not your financial advisor, these are my opinions. I think that if you have any loans or high interest loans, you should be looking to secure those and start paying them off wherever possible. If you have any longer term loans, house loans, look to put them on fixed rates wherever possible. As rates go up, then you will be more protected. Steer away from speculative high risk investments, because that means you can lose your money just as easy as you can make it. When times get rough, you always need to batten down the hatches, plan for the long term. You absolutely must look to boost your earnings. And we're also going to be talking about what you should be doing about this right now. I can give you a sneak peek. You need to be boosting your earnings. There's nothing ever going to go wrong when you increasing your income. I strongly recommend that you learn how to earn online. I've released a number of videos on how to do this, and you can do this from the comfort of your own home. The next video that you should be listening to is marked up above somewhere, so make sure you check it out. Otherwise, stay safe and I'll catch up with you really soon.